Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnny Market. You all know that drill. Hit that like button and subscribe if you already haven't. And just want to do a little disclaimer. Nothing should be construed as financial investment advice. It's just my opinion on the markets, commentary. It's for entertainment purposes mainly, or I guess educational. But if you are going to invest, don't invest on this video. Just consult a financial advisor. See my disclaimer below. Anyway, let's get into a couple of things I wanted to share. I wanted to share with you all. There was just so much to talk about. I couldn't get into it during the week, so let's get into these articles first. McDonald's misses quarter 2 estimates across the board as consumers pull back on dining out. This is what I'm saying. The cost of living is just too much. Prices, especially housing, have to come down. It's bad for business. It's anti-business. These high housing prices. So anyway, McDonald's customers are tightening their belts again as quarter 2 as they grapple with paying up for Big Macs. So let's see some more. Missed Wall Street's estimates across revenue, earnings, and same store sales. So there it is. Not even America's most dominant fast food player is immune to challenging macro conditions. So there you go. You have more. I don't know what that global same stores sales decreased 1%. So there you go. I love how they're saying consumers are more discriminating within their spending. Yeah, well, of course, when you don't have much money, you become a lot more discriminating. Or when you don't have the money to buy what you're selling, people are going to be very discriminating. So it looks like that $5 meal has not done them any good. So it's clear value leadership has clearly shrunk. Yeah, value leadership. Yeah. So in the US, same store sales decreased 7%, driven by a drop in foot traffic, the first decline in US same store sales in 16 quarters. And look, that was partially offset by menu price increases. Like, yeah, right. You keep increasing the prices, they thought these declines are bad. Wait till they see a month from now. So yeah, there it is. A bump from the $5 meal could help. Thing is, it's temporary. McDonald's, their input costs are higher, and their consumers are losing income. Their incomes are declining, so it's not even. Pretty soon, the value meal they'll be looking for three, and they just won't be able to even to look at it. So yeah, that's all. Look at it. McDonald's not doing well. Let's go into the next piece of news. Here it is, Wall Street Journal. After years of rising prices, food companies hit customers' limits. Companies dangling $5 burger meals, flakier biscuits to encourage consumer spending to keep profits steady. So yeah, there you go. Yeah, there's only when wages are the same, but prices keep going up. Oh, eventually they're gonna. But just to make sure it's not McDonald's, let's take a look at at Diego sees first annual sales decline since the pandemic. Of course, Diego is they own Guinness. Global sales declined annually for the first time since the pandemic. Sales fell 1.4%. Revenue decline. Now there was a foreign exchange impact, but also organic net sales decline. Of course, offset by hyperinflation adjustments. That's so organic net sales declined by 6% or 0.6. So driven by a painful 21.1% decline in Latin America and the Caribbean region. So wonder if it says anything about the US. But yeah, it doesn't matter. If the US consumer was strong, they would offset the Latin American and Caribbean region. So yeah, look at it. So it's not just McDonald's. Guinness isn't doing well. See all the airlines. It's travel season. They should be doing well. Oh, here it is again. U.S. airlines cut growth plans in a bid to stem from profit-eating fare discounts. So U.S. airlines are cutting their growth plans for the second half. Over the last week, airlines shaved a point of capacity off their growth plans. So money-losing low-cost airlines are increasing pressure to cut growth plans and call unprofitable routes. So see the airlines, they're reducing their capacity through the end of the year to bid to pool supply domestic, lead to lower fares and reduced profits despite strong travel demand. Higher fares are on the way. Well, this will show up in the inflation. So despite sizable overall reduction, we expect to see further cuts in the weeks ahead as carriers expect to continue to refine their schedules. So I love this. US executive noted strong demand, but a domestic market that's awash in flights, forcing them to dial back growth plans, which could drive up flares. If there was a strong demand, you wouldn't need to dial back growth. In fact, if there was a strong demand, you would be increasing the growth. So yeah, this is so you can tell they're completely lying about the strong demand because there's no point in cutting uh third quarter outlooks for Delta United earlier disappointed investors. So you can tell they're just not telling the truth. The real demand is not there. Southwest forecast a potential drop in third quarter unit revenue. So yeah, strong demand, but Southwest, which a lot of people fly, I fly that myself, is forecasting potential drop in third quarter revenue. So this is why I do this, so I can, they use a lot of word salad here, but if you cut through the word salad, the truth's hidden somewhere. And look at that. American Airlines reported a 46% decline in its second quarter profits and said it plans to dial back its capacity for growth in the coming months. So where's this strong demand? United, Southwest, see all these companies. That excess led to a higher level of discounting activity. So why are they discounting when there's strong demand? In fact, if anything, when demand's very strong, you raise prices to quell the demand so you actually can have the right amount of capacity based on what you can service. You don't discount when there's strong demand. So low cost and discount have been more aggressive in cutting unprofitable scaling. Spirit Airlines has wider than expected loss. Yeah, well, I think all the fights on the flights have really done a number. So anyway, airlines having troubles, as you can see. This is why I do this channel, to cut out. And here's one other thing that shows the bad economy is going to be worse. Wage growth drops for job switchers and our labor market. Most people, if they want a good raise, meaning not a 3 to 5%, normally just switch jobs. You can get a 10 to 15%. But when you have an excess supply of labor and the pay gap between job stayers and job changers narrow as the US labor market is cool. So year over year pay increases for job switchers fell to 7.2% in July, down 7.7% increase from June. So yeah, there you go. The payoff from switching jobs has dropped tremendously. So there you go. There you go, job switchers. This shows the labor market is not doing well. Uh, Job switchers right here. They're not getting paid what they used to be. So there more evidence the economy's, doing poorly. Job switchers, Guinness, Airlines, McDonald's. Now let's go to Wayfair. Wayfair CEO, Lincoln's home goods slowdown to 2008 financial crisis. Yeah, homes are too expensive, so people aren't buying them. And they act like it's an interest rate thing. It's not an interest rate, it's just a price thing. Wayfair likened the slowdown in our home goods category to the great financial crisis as the company reported misses on top and bottom lines. Yeah, they can't massage the expense numbers. Uh, Told CNBC in an interview that the declines it's seeing are similar to declines that they saw in 2008 and 2010 period. Category affected by stagnant housing market, but could see a resurgence when Federal Reserve cuts rates. No, there's going to be a selling and a home price. Basically, saw sales decline in its fiscal quarter. Current slowdown unprecedented, linking to the 2008 financial crisis. Credit card data suggests that the category correction now mirrors the magnitude of the peak decline of the home furnishing space experienced during the great financial crisis. So here it is, reported a loss of $42 million. So there it is. Sales dropped right here. 3.2 billion. Of course, they lost money. So for Wayfair expects revenue to be down in the low single digits. So yeah, there it is. 08, no one's buying houses, so prices have to come down. It's not interest rates. Once again, they always have it wrong. They say it's interest rates. No, it's prices. Even if interest rates were at zero, people won't be buying houses. They can't afford it. So anyway, just technical. There it is, Wayfair CEO. Two more articles that really stood out to me. 1 million people now owe more than 200,000 in student loans. You really think these people are going to be buying houses at these prices? Like this is the general demographic. They think all it is interest rates. Number of federal student loan borrowers with six-figure debts is on the rise. If we had such a plentiful job market, why the debt should be coming down? So there it is. And this just goes to show there's got to be some sort of forgiveness on this. I don't care what people say. Not a socialist. I'm a pragmatist. You believe in Social Security, Medicare, any of this, you should not be against this. And not only that, if you want your home prices to be to maintain, like who's going to buy them? These people, these students. I have no debt, so I have a car payment. That's it. But I don't even have student loans, so I wouldn't even benefit from any of this. But 1 million people now owe more than 200,000 federal student loans. Sorry, it won't be paid back. Usury. This type of stuff leads to revolutions. And I don't want a French Revolution. So anyway, let's once again, Congress. Nancy Pelosi buys more Navidia, sells Microsoft. So I was covered how Microsoft did not do well in its cloud revenue. So once again, I wonder if Pelosi is going to have a stock trading class. So the people can learn how to trade so well. Why doesn't she have that? So new congressional trading form filed by Pelosi disclosed she bought more shares worth of Navidia and sold some Microsoft. Funny thing is, Nvidia's customers are like Microsoft. So purchased 10,000 shares worth of Nvidia. Transaction worth 1 to 5 million. Congressman must really pay. Sold about 5,000 shares of Microsoft worth about 1 to 5 million. So maybe the top in Nvidia is not. I would say the top in Nvidia is probably not here. She would probably be notified about it before. So anyway, that's all I have to share for you. More stuff. Congressman, Pelosi starting to sell, so maybe that's a sign of a top. So anyway, let me know, comment, like below. And if you watched all the way through, thank you. Hit that like button, subscribe if you haven't, and I will see you next video.